Tax season is here, and today I want to share with you my top 10 best tax deductions that I use for my own business in order to reduce my taxable income at the end of the year. Now, these are my top 10 because they're the most common and the most beneficial to any e-commerce seller. So it doesn't matter if you sell on Amazon, Walmart Plus, Shopify, eBay, or a combination of all of those. You can use these because they're the most common and they apply to every type of e-commerce platform that you'll be using. Now, before we begin, I must say that I am not a CPA or a certified tax professional. This is just based on my awareness, my knowledge, doing this for the past 3 to 4 years when I take these deductions to reduce my taxable business income. So just remember, always consult with your tax professional before taking any of these deductions and to make sure that they're a fit for you. So our first one, and which is the most common and probably the largest expense that you have, is your cost of goods sold or your COGS. If you're unaware of what this is, I'll bring up the IRS publication 535. These are expenses that include anything of the following: cost of product or your materials, and it even includes freight, which is your shipping to, if you're shipping from China to Amazon, those costs are also deductible. This also includes storage, whether that's at Amazon or if it's at your personal location, your business location, any type of labor that is involved in that process, and factory overhead. For example, let's say that we order a product from our supplier over in China through Alibaba, and that unit rate is $5, and there's shipping that's about $2 per unit. So that's $7 per unit that we can deduct for every unit that we purchase. So think about all of those costs that it takes to procure that product, to put it at Amazon, and to have it stored there. Deduct all of that off of your final net income at the end of the year. That is a major one because it's usually between 30 to 40% of your overall revenue. It's definitely a large portion. The second one is advertising. This may or may not apply to you, but if you're an Amazon seller, Amazon pay-per-click advertising, or PPC, is probably the most common advertising platform that you'll be using. I also have here Google AdWords. It's another popular choice. So the IRS defines that you can deduct any advertising expenses as long as there are reasonable expenses that are directly related to your business activities. So if you're promoting your brand or your business, or possibly just a single product to an audience using digital advertising or newspaper advertising, whatever it may be, you can deduct those expenses in full. Now, it's very important to understand that this has to relate to your business activities. So if you're advertising yourself on Match.com or something, you cannot deduct that because it's not related to your actual e-commerce business. The third one that we have here, this is also a large one, and it may or may not apply to everybody, but if you're a more established business, you probably have some type of liability business insurance. You're also able to deduct that in full your total premium. So if we go to publication 334, these are just some common types of insurance policies that you might have for your business. So if you're in real estate, you might have fire or flood insurance. It's very common for real estate landlords, such as myself. But for you, what's probably the most applicable is your liability insurance, or if you have some type of workers' comp policy, insurance policy, if you actually have employees working for you. If so, you can deduct any of these types of insurance and your total premium for that year. Okay, next we have our home office tax deduction, very common one, and it doesn't matter if you own a house or if you're renting a house or an area of space. As long as you have a dedicated space within your own rental or your own home, you can deduct that square footage divided by the total square footage for that entire housing or apartment unit. So as we can see here on the IRS publication, you have to make sure that your home office is something that you use regular and it has exclusive use for your business. It should be your principal place of your business. So if you own or lease a retail space and you also are claiming a home office, it's not going to work. You have to make sure that that is an exclusive area where you're conducting all of your business. Now, if you're an Amazon seller or an e-commerce seller like me, it's very common to have a space where you do all of your negotiating with suppliers, procuring of products, actually getting those products to the final warehouse. So as long as you're using your home office for those principles, you should have no issue in taking this home office deduction. Now, there are two ways to take this deduction. One is a simplified option, which I would recommend if you're doing your taxes yourself. It's much easier. And the second one is the regular method. Now, the simplified option is going to take your square footage based on the total square footage of that living space, and you're going to use that using IRS calculations. I'm not entirely sure how to actually calculate that, but if you're using a tool like TurboTax, you'll have no problem in figuring out that simplified option. The second is the regular method, and honestly, you might be able to get a larger deduction with this, depending if you own a house or if you're renting, but this really just takes into account all the mortgage interest you pay, your insurance for your home, utilities, repairs, and actual depreciation for that space, which is your home office. If you want to go through all of those different requirements and input all of those for your tax return, by all means, you can go ahead and do so, and you can see if it's going to give you a larger deduction. But just make sure if you have a home office and you solely use it for your business purposes, use one of these two options in order to take a larger deduction off of your taxable income. The next one is a smaller deduction, but I guarantee it's applicable to everybody because if you're working in e-commerce, you have to have access to an internet, and more than likely, I know you have a phone at this point in time. So you can actually deduct your entire cell phone expense or your utility bill at the end of each month to a certain percentage. So I'm sure if you have one phone that you use for personal uses and business uses, you need to figure out what percentage of the time are you actually using that phone for business purposes versus just personal purposes. If you have a business phone, then you can deduct that entire utility bill for that device. Internet is the same way. If you have one internet plan for your home and you use that for your home office and for your computer, then you can just use a percentage of that internet bill instead of actually deducting the entire amount unless you do not use that internet for anything but business. All right, we have a couple more here, and the next one is educational expenses. So think of things like courses online that you take maybe to become more professional with your Amazon or your e-commerce business. That is fully deductible as long as you're meeting two main requirements. The first one is that course or that education that you take, it has to maintain or improve your skills needed for your present work. So if you're taking a course that's enhancing your e-commerce experience and expertise and your skill, then yeah, you can deduct that. And the second one is by law, it requires to keep your present salary, status, or job. If you're self-employed, you don't have to worry about this. It may affect you if you aren't. Some other expenses that you can see here: tuition, book supplies, lab fees, anything of that nature, certain transportation for that education, and then also cost of research and typing, which probably isn't applicable to you. Our next tax deduction are business supplies. So think of some common items as an e-commerce seller, such as shipping to your customer or actual packaging. So the cardboard, the tape, everything, including the labels, you can actually deduct that. That's very important to understand. We mentioned the cost of goods sold earlier, which I also mentioned that you can deduct freight/shipping charges. Now that's shipping from your supplier, freight charges that are coming from that area. What I'm relating to here is actual shipping to your customer. So if you're doing Amazon FBM and you're fulfilling every order, that shipping charge that you're paying on the behalf of your business is actually tax deductible. I'm not referring to shipping from the supplier to your actual location or to Amazon, because you cannot double dip. You cannot write it off for your cost of goods sold and your business supplies. They're two very different things. So it may be a bit tedious to think about all these individual components that build up to your Amazon business regarding supplies, but make sure you add everything in there, because when you add all the cardboard and the tape and the labels, the printer ink, anything of that nature, it's going to add up, and you're going to get at least a couple hundred to a couple $1,000s off your business, depending how large it is. Do not forget this one. It's minor, but it can really add up to a lot. The next one is a fun one. This is any travel expenses relating to your business. So did you travel to any Amazon or e-commerce conferences this year? All of that travel, from the airfare to the Ubers to even some of the meals, they can be tax deductible. Now I'm going to pull up the IRS topic number 511, and this just goes over some common deductible expenses as it relates to travel. So as I mentioned before, if you took an airplane, and it could be any type of transportation between your home and your business destination. Again, taxis, Ubers, any type of baggage shipping, using your car if you're going to that business destination, which is something we'll also get into here for the next one. Any lodging includes Airbnbs, hotels, dry cleaning, and as you can see here, there's an entire list of all the things that you can deduct for travel. So don't forget to take this tax deduction, because if you're traveling by air, it's really going to add up to a lot and reduce your taxable income. Okay, next, and speaking about travel, let's talk about using a business vehicle for your e-commerce business, which is using a business vehicle or using a personal vehicle for business purposes. And that all comes down to tracking your mileage. So make sure anytime that you go to a supplier's location or anything that relates to your business, you're tracking that mileage, because you can expense that come the end of the year. So for 2022, you can expense 58.5 cents per mile driven for business use. And that's actually up 2.5 cents from 2021. So let's pull up a calculator here to get an idea of how much that could be. So let's say that you traveled 2,500 miles for business use during 2021. You multiply that by 0.585, which is 58.5 cents. So you would be able to deduct $1,462.50 off of your taxable income as this mileage rate. So it's something that's very convenient. There also are other ways that you can deduct a business vehicle with depreciation in the actualized method. Again, consult with your tax professional for that one. But with a simplified standard mileage rate is usually the easiest to use if you do not have a whole lot of mileage for each year. All right, and lastly is our inventory. So if at any point in time, if you use a dedicated space in your house or your rental dedicated to inventory and storing inventory, you can actually deduct that space. Now, what I recommend, and we'll look into this publication 587, is to make sure that your home office is separate from your inventory space. So maybe you have a basement and about 500 square foot where you actually keep all of your inventory, whether that's going to Amazon or if it's just going to stay there until you sell it, you can actually deduct that space. So I'm going to highlight some bullet points here that are very important. You can take a screenshot of this to make sure that this deduction is applicable to you. But most importantly, you just want to make sure that you are in the e-commerce retail space. You're using one location in your home, an area to store products, and they do not have to actually be products that you're going to be selling. It could just be for a time being where you're storing products or product samples and getting them to the final location. So just keep that in mind. Make sure these bullet points apply to you, and if they do, then you can use this inventory deduction. So thanks for watching today, guys. I hope this gives you a better idea of tax deductions you can take, and I cannot stress it enough. Make sure that you take these deductions and you reduce your overall taxable income at the end of the year. It's very important because as a self-employed individual, you are taxed higher with the Medicare and Social Security tax within the United States, so you have to actually pay that employer portion. Without getting too far into details, just make sure you take these tax deductions so you're not paying more in taxes at the end of the year.